The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading.
Well, Tuesday, once again, felt like a consolidation type of trade. It was mixed in grains and oil seeds and mixed in the cattle and hog complex a little bit lower, but a much quieter day after a risk-on trade to start the week. Let's talk through things. Joining us now, Jacob Burks with agmarket.net. Jacob, welcome back to Market Talk. How are you, sir?
I'm good, Jesse. It's good to be here.
I was going to say a quieter day for traders and folks in the industry on Tuesday. I mean, Monday, big moves, a lot of talk about the China soybean purchase rumors, and got some confirmation of that from USDA Tuesday, and a big NOPA crush. But all in all, I mean, you look at Tuesday, it just kind of felt like we took a breather after all the volatility of the last several days in the grain trade, Jacob.
Yeah, what a boring day. You come off of a WASDE report on Friday that showed some weakness in the markets. There's still some stuff boiling in this grain market. You come in here prepared to maybe want to establish some long positions, but you didn't have time to think on Monday. It was boom, gone. And I think that was a lot to do with over the weekend, seeing the rumors, hearing the rumors, and knowing that, hey, the big purchases are now here, stuff that'll actually turn your head and look when we're talking about China having a lot of beans to purchase. And I think the market today was almost a yawner by the standards that we've set over here the last couple of weeks. But sometimes that you kind of got to bend your knees to jump a little bit. And there's still a lot of bullish sentiment in this marketplace.
Well, let's talk about the corn market. That is an interesting one. I think it's been lost in the shuffle with everything going on in the news for soybeans and more. But you made an important point to me. Corn getting above the 200-day moving average on Tuesday. Could that be a big deal for us here, Jacob?
I think you look at the charts and you look at what's kind of been a headwind for us as we went into the WASDE report. We had a little bit of a pullback whenever we didn't cut as much yield as we thought. We poked our head before that WASDE report through that 200-day moving average, and it felt strong. With the negativity and closing below it, for us to kind of slowly grind, with what we thought has been on the backs of the soybean market, and then see us to kind of go alone today and closing, finally having a close above that 200-day moving average, I think is a technical structure that I think we're going to come to be happy with.
Well, and looking at these markets, corn has been kind of that third leg of the stool. Beans have had the big run up. Wheat's kind of followed as well. But corn, I mean, you look at the price action here. It's not a bad price. Basis remains relatively strong. I mean, these are some okay price levels heading into the holiday season, Jacob.
So there's a lot of different angles on this corn market, and I feel like I've touched every one of them. It's kind of whenever you go to answer that question, I can speak out of both sides pretty quick. All in all, we're up against this 450 level in March, and it's like you said, it's decent, it's good. I think it's if you look back at what you've had going through the harvest, and you put it away in the bin, and you're sitting there scratching your head. Okay, what do I do with this? When do I go ahead and get paid? And what's basis done? All this good stuff. And you look at the macro picture. What they said in the WASDE report is we've got a 2.154 billion bushel carryout. That's not burdensome. But you look at some of the underlying factors. Is the yield too big still? Maybe. But so is the demand. So I think that what we're going to see is as we go through this whole marketing season, we're probably going to stay around that 2.15 billion bushel carryout. So I don't think that changes just a whole lot. And if you go back and you look at what we've seen from the global corn situation, I think there's a couple different ways to look at it from a total, corn situation. If you look at every country out there, you're seeing the world stocks numbers start, slowly grinding lower, and it's getting pretty tight. But when you look at it from the exportable, like what countries can export, it's not so bad. It's not so fearful that we're running out of corn. You take the United States out of that and look at the other countries. The Ukraine situation. You got some EU stuff. You got some of the Argentina corn, and that gets tight again. So there's a couple of different angles to look at as far as what's available to be shipped to satisfy the largest global demand that we've ever seen.
Thinking about that WASD too, and some of the numbers you mentioned, yield, a lot of folks saying, I think that needs to come down a bit, et cetera. But you start to plug in these demand numbers to your point, corn, or you look at beans, wheat, cotton, et cetera. I mean, between now and January, and even after January, it's going to be really interesting to see how USDA, figures out their numbers, I guess is the best way I could put it here. But, yeah.
You look at a lot of analyst private numbers that you see come out. You look at the WASD, and the first thing I always say, Jesse, is the WASD, the USDA does. They do a better job than everybody accounting bushels. Okay, they have the data. They do more research. They do everything. So it's really hard sometimes to argue with what they come up with. So the one thing that we've seen, to have a gap of 2 months of not seeing export sales, I mean, I don't know that anybody could do a good job through that time frame. So then, I'm kind of looking forward to the December report, and might see some of those changes that were typical between the October report, that you might start to see some of that trickle into this. It's going to change. It always changes. You look at where every year we look at, okay, we were here there. Last year in January we had that 4 bushel cutout. But did we? Should we have? I mean, you go back and that's the area that I have a big problem with, as far as saying that in the fourth quarter of last year we cut that much out of feed and residual and had that big of a drawdown, and now we're sitting here with going into the winter months, like you're saying, going into this dead time, looking at a 186 yield, 2.15 billion bushel carryout. What happens in January? And I think that's a really big question on everybody's mind. Is what if we get that type of cut on that yield number, and then that's what we're using going forward throughout the spring? It could set for some fireworks in the corn market for sure.
So thinking about this though too, I think from now till that January report, going through the holidays, we've had a bit of a price rally here in these grain contracts. I mean, is this a good time for producers to really hone in on their risk management ahead of that January report? And not to discount December's WASD, but typically there's no changes. So really the focus is now to January, I feel like, to look at your risk management options, right, Jacob?
Yeah, I mean, first of all, we're seeing huge demand in the corn. Okay, I mean, it's been big. Like for it to get bigger, I don't know, what we do. Maybe there's some stuff coming down the road that we're going to see some E15 put in legislation. I don't think it's a big push right now. But ethanol demand's been great. What gets your bushels shaken out of the bin? I think is the big question right now. What numbers are out there? And I think if you start looking at that, and I think it's really important right now to get, you're not going to get filled if you don't have an order. To sit here and wait for that moment to come to have your orders in place, whether it is corn, beans, or wheat that you've locked up, I don't think it's a good idea. So I think if you're looking for a 460 level or something in March, have those orders out there, and I think that's very important. Personally, on the corn market, I do feel like we have an opportunity to see some of those levels. But man, I just don't want to sit here and watch a 450 March price come by and me not have something done, and not done something with this rally that we've seen. The 2 months ago, we're begging for this type of price. I think it's very important to lay some floors in here and then set the targets to sell it. You might only own a put option for a day, maybe a week. And then as those targets are hit, then you can get rid of your risk management.
Let's talk about the livestock trade. Cattle first, kind of mixed day on Tuesday. Obviously, just more volatility here. What can we say? I guess your perspective here near Thanksgiving, Jacob. I mean, are we running out of gas? Are we charts? Are they looking better? I mean, what's your thoughts across the cattle trade right now?
Yeah, I'd love to see the cattle charts anyway build some type of floor. We had some really good support down there in the live cattle last week, where we came down and hit that long-term trend. With the long-term trend, you start seeing some of these fund traders and some of these algos and some of the stuff off of those, really get active. And I feel like that's what we did. Speaking to that tone, it's really hard to see these algos trade in a thinly traded market. And I think that's really added to some of this volatility. When you see the momentum trades, you see the momentum algos that as the open interest moves and the volume turns one certain direction, and next thing you know, you've got a 13.75 cent move, in a day. And it's just really, really painful. Now, it's from a fundamental standpoint, and say we're still short cattle. We still have boxed beef that's found. It feels like it's found a little bit of stability around that 370. I think was the number I saw today. So I don't no, we're not over. I mean, the thing about it is this is still a pretty good price. Your guys that have a really large pain point right now, the guys that were purchasing cattle going into this last move in this last month, and before this market really fell off. And that's a large pain point, but I don't think it has to be over. I think the idea that we're still seeing an economy, if you will, that is really, really, strong. And I think that inflation is still, in my opinion, is pretty high level right now. So I wouldn't be surprised if we find stability on these charts, that if we don't see some of that money come flowing back into a cattle, thinking we have one more run.
Wall Street maybe playing a role here a little bit too, just with some of the outside volatility. I know investors are pretty nervous right now heading to the holidays. What are things going to look like? I mean, and just of course the cost of beef at the grocery store for consumers and more, and all that topic that's in the news right now. I mean, is that playing a role, some of that outside market sentiment here, Jacob?
Yeah, I mean, I don't think it's you can sit and discuss and argue all day long regarding the tweets that were put out as far as making beef a little bit cheaper. I don't think it's a problem. I think it's right. The last thing you want to do is ruin demand in a long-term situation. So I'm pretty happy with what the stability that we have gotten. I think we have gotten boxed beef anyway to come down a little bit. But when you go back and you look, Jesse, at the M2 money supply that's available in this world, we went through COVID, all the quantitative easing that we saw. We saw the interest rates come up. We saw a pretty good dip in what's available. But it's not just our country. You're seeing other countries out there having some quantitative easing, trying to boost their economy. Our M2 money supply, I think in August, we actually went above where we were at in 2020. So at this point right here, what happens whenever there's more money and the fears of inflation are going? Where does the money typically go to? It typically goes into the commodities. And I think that's what you're seeing a little bit of. And to jump really quick back to the soybeans, I mean, we don't typically stay here at this $11 level. I think that there's a lot of money coming in with the funds, thinking, hey, we're buying, China's buying beans again, we're going to go higher. I don't think that that's something with the cattle that I think could flow back in a short manner.
Yeah, well, and I think about this too, Jacob. Hog market, that's another piece of this puzzle as well, and it's been a bit interesting, some pressure. I mean, your feelings on the hogs right now, and I'm not talking Arkansas football and basketball, buddy. I'm talking lean hog.
Hey, we're a lot more optimistic in the ones in Fayetteville right now than what we're seeing here on the charts. I mean, this is kind of an ugly day. This is one of those days that we went down, made new lows. And I believe we settled on those levels today too. So it really sets up an ugly chart. When you start looking into the fun, I believe we ramped up production a little bit too much, going into this holiday season. I think you're seeing the effects of that, and I think you're also seeing the push of the proteins lower. Wanting the cheaper beef, and I think that really flowed into what we're seeing with the demand anyway from hogs is. Hey, we just kind of oversupplied it pretty quick there, I believe, and you're starting to see cutouts kind of lead the way down.
Jacob, good stuff. Any final thoughts you'd share or reiterate with folks here on the show today?
No, Jess, I think we've about covered it. I do think that, I sat here and I could really talk myself into being bullish in the beans and the grains, sometimes just money flow and all that good stuff. But that's when it's your livelihood and you're looking at that. I think it's very important to get your hands on some cash now. I think it's very important to keep your marketing plan where you're putting those targets to where we wanted them to be and not get overly, optimistic and overly bullish in your mind and just think, okay, now we're going to set and watch for these big moves that everybody's talked about could happen. Hey, the charts are set up for it. The charts are set up for some explosive markets, especially if you have some problems in Brazil. But man, just look at that. You use the board, use some paper on that to put yourself in a position to take advantage of those and not sit there and leave your corn and beans and wheat in the bin and not be able to take advantage of it on the grain side.
Jacob, if folks want to reach out, have a conversation, take a look at your guys' intel and much more, I know the best way is to get started online, isn't it?
Yeah, take a look at agmarket.net. Man, just take that 30-day free trial. I think that's a great way to kind of see what all we do, and then come see us in Nashville. Jesse's on.
I was going to say, you guys are going to be there. What is that? The
The
first
weekend
couple of
between
days
the
of
Super Bowl,
February.
or weekend right before the Super Bowl every year. That's when we're there.
Well, folks can get the details on all of that. Get signed up, agmarket.net. Jacob Burks, thanks for joining us here on the show today. Appreciate it.
Hey, Jesse, thanks for having me.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.